Warren Buffett has always been predictable, and that's been his superpower. For decades, he's told the world exactly what he believes, and then he's proven it with his actions, year after year, through every crisis and every boom. He taught us to buy wonderful businesses at fair prices, to ignore the noise, to hold on when everyone else is scared, and to trust in the long-term reality of the economy, not the short-term headlines. But today, if you look closely at Berkshire Hathaway's balance sheet, something unusual stands out. It's bigger than any single stock purchase he has ever made. It is a move that signals a deep conviction about where the entire global financial system is heading. You see, Buffett's largest bet right now isn't on Apple or Coca-Cola or even on railroads and energy companies. His biggest bet is on liquidity itself, on cash and assets that are almost cash, especially short-term U.S. Treasury bills. He's holding these at a scale that completely dwarfs anything in Berkshire's history. At the last count, Berkshire Hathaway was sitting on well over $180 billion in cash and Treasury bills. To put that in perspective, that sum is so massive it's larger than the entire market value of most publicly traded companies. This isn't an accident, and it's not indecision. This is a deliberate, strategic choice. So why does this matter so much? To get it, you need to understand Buffett's relationship with cash. For most of us, holding cash feels like a waste. It earns next to nothing, it's not exciting, and it feels like you're sitting on the sidelines. But for Buffett, cash is oxygen. He said over and over that having cash lets him sleep well at night, and more importantly, it allows him to act decisively when others are panicking. Think about past crises. During the dot-com crash and the 2008 financial meltdown, Buffett used his cash pile as a weapon. When banks were collapsing and fear was running wild in the streets, he stepped in. He secured preferred deals with high interest rates and ironclad terms, all because he had liquidity when absolutely no one else did. He was the lender of last resort, and it paid off handsomely. But what makes today different is the sheer scale of it all. This isn't just a tactical reserve fund he's keeping for a rainy day. This is a mountain of cash. It suggests that Buffett sees something on the horizon, something that might require more firepower than any previous crisis. He's not just preparing for an opportunity, he's preparing for a seismic shift. So what's he waiting for? There are a few possibilities. First, he might believe that asset prices, stocks, real estate, everything, are simply too high. He's famous for his discipline, refusing to overpay, even for the best companies. With the market hitting all-time highs, maybe he just can't find anything worth buying at a price that makes sense. By holding cash, he's exercising the ultimate form of patience, waiting for the sale of a lifetime. Second, this huge cash position could be a defensive move. With geopolitical tensions rising, stubborn inflation, and central banks navigating a very tricky path, the risk of a global economic downturn is real. Holding Treasury bills isn't just about earning a small, safe return. It's about preserving capital in the safest asset on Earth. It's a fortress built to withstand a storm. If things go south, he won't just survive, he'll have the resources to thrive when the dust settles. And there's a third, more profound possibility. Buffett might be signaling that the very structure of our financial system is more fragile than we think. In a world of massive government debt and unprecedented monetary experiments, maybe he believes that the ultimate safe haven is no longer a specific stock or sector, but pure, unencumbered liquidity. When everyone else is leveraged and exposed, the person with cash is king. This $180 billion question isn't just about what Buffett will buy next. It's a statement about risk, opportunity, and the state of the world. He's not just sitting on cash, he's armed with it. He's waiting for the fat pitch he's so famous for, but this time he's expecting it to be the pitch of a generation. While we are all chasing the next hot trend, the Oracle of Omaha is quietly making the biggest, most contrarian bet of his career. A bet on patience, a bet on discipline, and a bet on the enduring power of cash in a world filled with uncertainty. The lesson for all of us? Maybe the smartest move right now isn't a move at all. Maybe it's preparing for the moment when everyone else is forced to move, and you're the one holding all the cards. Thanks for watching. If you found this insightful, don't forget to like and subscribe for more content. See you in the next video. Ever wondered why Warren Buffett, arguably the greatest investor of our time, is sitting on a record-breaking pile of cash, over $189 billion? It's a question that has Wall Street buzzing, and the answer reveals a masterclass in patience, discipline, and a deep understanding of market psychology. Let's break down the genius behind Buffett's big cash bet. Imagine you own a corner store. Business is good. But suddenly, your suppliers start charging you way more for everything. And your customers are so eager, they're practically throwing money at you, even for yesterday's bread. Now here's the kicker. The bank starts paying you a solid 5% interest just to hold your cash. What would you do? Would you spend all that cash on overpriced inventory, hoping the frenzy continues? Or would you pocket that sweet, risk-free interest and wait for the inevitable sale when prices come back to earth? That's precisely the situation Buffett finds himself in. He sees a market where assets are priced for perfection, Stock valuations are high, and the excitement feels a bit too familiar. Buffett has famously said, "Be fearful when others are greedy, and greedy when others are fearful." Right now, the market is feeling pretty greedy. The sheer size of Berkshire's cash hoard is a clear signal. It's not a doomsday prediction, but a quiet statement that the real bargains, the kind of opportunities that build legacies, haven't shown up just yet. He's not chasing the market. He's waiting for the market to come to him. This isn't just about waiting for a stock market sale, though. There's another deeper reason tied to the very heart of Berkshire Hathaway: insurance. For decades, Berkshire's engine has been its massive insurance operation. Think about it. Companies like GEICO collect premiums from millions of people. This money, known as float, doesn't belong to Berkshire, but they get to invest it until policyholders file claims. It's like an interest-free loan from the public, and it's been the secret sauce to Berkshire's incredible growth. But with great power comes great responsibility. Buffett knows that one day the claims will come. A massive hurricane, a devastating earthquake, or a global financial crisis could trigger a flood of payouts. That's where the cash comes in. It's not just idle money, it's a fortress. It ensures that no matter what happens, Berkshire can meet every single one of its promises without being forced to sell its prized investments at the worst possible time. It's about building an institution that is, in his words, unbreakable. At 95 years old, Buffett isn't playing for the next quarter's earnings report. He's playing for the next century. He's thinking about his legacy and the long-term resilience of the empire he built. By holding this much cash, he's making a powerful statement about financial prudence. He's choosing security over speculation and stability over short-term gains. It's a strategy that might seem boring to some, but it is the very reason Berkshire Hathaway has weathered so many storms and will likely continue to thrive for generations to come. So, while everyone else is scrambling to find the next hot stock, Buffett is calmly collecting a hefty interest payment on his mountain of cash, patiently waiting. He's not just sitting on money. He's sitting on opportunity. He's holding the ultimate tool for an investor, dry powder. When fear finally returns to the market and prices fall, he'll be ready to deploy that $189 billion and go shopping for bargains. And that, right there, is a lesson in investing we can all learn from. Thanks so much for watching. If you found this breakdown insightful, don't forget to hit that like button and subscribe for more deep dives into the world of finance and investing. See you in the next video.